Yesterday, did get a traditional PTP breakout long signal. And I'm sure it came through in my analysis last night. And one of the best things about trading technical objective signals that you've back tested to have a high hit rate is going to be the ease at which you trade. And I know that's one of the most transformative things that students of ours who come in and learn how we trade and adopt the methodologies themselves, that's the first comment. They're like, they tell me, well, they tell lots of people, but they tell me that it's good to be able to take trades and sleep at night, not only because you're now managing your risk and you know what your maximum downside is in the worst case scenario, and not only just your trades that you have on, but any spot positions that you have in Bitcoin, because we are either simply spot long and we know what our max downside is, or you're hedged short and you, again, know what your absolute max downside is. And I would say that the majority of traders in cryptocurrency are unaware of those things, right? From a dollar perspective, right? So first off, you have the camp of traders who are only concerned about sat value. That's fine. But regular traders, I don't want to say regular traders, but majority of traders like myself who are focused on increasing their dollar value, right? Like we all look at the BTC USD chart. We all want number to go up for the most part in the long term. And that is Bitcoin versus dollars, right? And in the macro sense, right? Like the meta sense, we want to eventually not care about the number on the right-hand side, but we all know that is a long journey to get there, right? Long journey to get there. And while I still have to pay my bills in dollars, we are concerned about our dollar margin. That's not that we are obsessed about it, but that is what we're focused on. So anyways, and hedging allows you to do that, operating from a cash neutral basis. But again, that is that is a far better alternative, in my opinion, to selling into BTC USD. Don't really like spot trading like that. Having said that, yesterday got a regular PTP breakout long signal, and I will not lie, I have a bearish bias. So it was, so you generally 99 out of 100 times when I put on a trade, it's unthinking, it's automatic, it's robotic. I have no problem. I know if I will win or lose. But I am also at times a discretionary rules-based trader, right? I have rules where I take discretionary setups. Everyone that's in my group and everyone that knows me and has traded with me knows this. And so I do I apply discretion to certain setups of mine. And I've had a bearish bias for a while. And so, it can be one of those times where I look at the chart an extra second and I'm like, I don't know how I feel about this one. But anyways, I took the long last night at the daily close, logged out of my accounts, went to bed, right? Well, not directly. I stayed up and worked, but went to bed and I don't look at the charts again. Because what's the point? I'm not going to countermand my daily setup, right? I do that in the morning, right? So in the morning, as I woke up this morning, I logged in, looked at structure on the lower time frames. I started from the top and worked my way down. It's Monday open. How is the market responding? How is the American opening market responded to this? I got up at about 6:30 this morning. Got to the, so I woke up at 6:30, got to the charts around 7:30. And I had seen that price, and we can see this on well, before we get into that, we can just see, here's the regular signal. Of course, we have the Wadatar powerful signal that came in yesterday, CCI confirming above the baseline, and of course, Minx giving us the go-ahead. So, reverse to this morning. And, I got in and I got with my analyst team this morning, and we were kind of looking at everything, looking at price. And the one setup, and it's funny because I wrote this down to post about it, and then it happened. And so then I had to not only post that in my educational channel this morning for the members, detailing exactly how this trade setup was generated. And this is, in general, people call it different things, but I call it a swing failure pattern. This is a lower time frame swing failure pattern. So we've made a new daily high. And what we saw, two ways this can happen. A new daily high, and this is on Coinbase. So let's actually go look at, for example, I don't have the same charts open up here. So that's my trading computer. So let me load CME futures. There's two ways you can see this occur. Here's the CME futures chart. There's two ways you can see this occur. Obviously, the first thing that I woke up to this morning was everybody talking about the gap. The gap has now been tentatively filled, right? The gap stretching from 74.20 to 72.35. There's about a $40 to $50 premium on the CME futures price. depending on the exchange that you're trading on. So I'm trading on ByBit, so I noticed there was about a $40 to $50 premium at peak. So be aware of that when you're setting your limit orders, and of course use your exchange to actually navigate where you're going to be setting your orders. Example, right? So several factors here that influenced my trade this morning was the swing failure pattern. We can kind of go back in time and see this previous high, right? This previous high, the last high that we had made, coming back all the way up to the top of this range. And what did we do? We rated it for liquidity, right? So we wicked above that line and immediately got sold into. And that in and of itself, if that happens on okay volume, that's not anything that I really concern myself with price action wise. But look at the volume on that. Is what's known as a blow off top. It's what's known as a blow off top. And what do we get? Very following that, we get a bearish engulfing candle all the way down to the bottom of the range. 9 out of 10 times, that's not going to be anything like a stop loss hunt or a fake out, right? You know, if the candle that wicks up and forms the swing failure pattern closes red, that's extremely bad. That's almost always bearish. If it closes green, you sometimes can get a pullback and then continuation. It's still safer to have the bearish bias, but maybe wait for the initial sell off and then, short the BPC or the rounded retest, right? Can often be a good setup. But in this case, I just knew. I just had that feeling. I had been hesitant about the long in the first place, even though I took it without question because my system signaled for it. So monitoring the price action this morning with my team and hearing their bearish bias and knowing exactly what I was looking for, gave me quite a bit of confidence in the setup. So anyways, I was able to stagger in right around between 75.50 and 75.70. Immediately got that posted. And again, the way that I generally do things is I post the signal to my group first, to my members, to my family, and then I enter into the trade, right? So I've got multiple screens set up, but I don't want anybody to, I just do that because I think that's the right thing to do, right? And it only takes me an extra second, right? So you got some people, because I've talked to other people who disseminate trades or share trades or anything like that, or copy traders who will take the trade and then post. It's whatever. It's probably a minor thing. Doesn't matter. But anyways, and of course we had Agri Trade come up. So the order books were really cool to watch this morning. By the way, I don't know if you guys are aware of this, but what we were talking about too as well was this kind of battle over on Coinbase. And we'll pull open while we're sitting here talking about this, I'll pull open Agri Trade. Was this battle on Coinbase. So there are two whales, it seems, right? Two whales, it seems, battling it out on the Coinbase order books, right? I watched it all morning, right? Spoof orders come in and off the books, big market buys, lots of flexing, pretty much about 300 BTC sells. And I noticed that a few people also noticed this on Twitter. Some other people posted about it on Twitter this morning. But on the Coinbase order books, Coinbase Pro, seeing about, 300 BTC sell walls flash on and off, which you don't often see on Coinbase, which is why it was unique. So when I was kind of alerted to it, I went and looked and I was like, this is kind of weird. And anywhere between like 50 to 150 spoof orders to the buy side show up. And then big market orders, 30 BTC market orders, 20 BTC market orders to both sides. So pretty intense battle. Right throughout this entire range. Right here, all throughout this lower time frame range, pretty much from here up and then kind of over this period. So you can kind of see the big market winning, big market buys winning. And then just as we were kind of wicking up to the upside, there was a pretty intense battle, but ultimately ended up in a swing failure pattern, in a reversal signal. And we were able to catch that move into the downside. Now I have gone ahead. My targets for this trade, we're just targeting the CME gap. So I've already taken 50% of my profit off the table now. I haven't moved my hard stop loss to break even. I am going to be kind of watching this and potentially refilling back at 75.50 if it fails, and we are going to get a more pronounced movement. But before we get into that, I want to explain a couple other factors that I'm watching this morning, and that is going to be going over here to here's our hash rate. Here is our hash rate and funding. All right, which we monitor, and something has happened today that has not happened since November 19th. And remember, on November 19th, we did enter into the period of minor capitulation, which is kind of our huge warning that there's going to be a big blow-off bottom. I didn't see exactly the blow-off bottom that I wanted. I really was and still am looking for that movement to 4.9K. And discretionarily, I'm really looking at all the bullish sentiment that's going into the market right now, and I'm just not really feeling it. I was hesitant about the long trade yesterday because, my discretion, my experience is telling me, again, this is not the time of year to typically go long. December is almost universally not a good time to go long, especially the week before or of Christmas. It's almost always sellers in control from the macro. And we have seen, like one exciting bullish candle, that bounce off of the bottom. And then what seemed to be the actual breakout candle yesterday. But it was Sunday, weekend volume. But again, kind of the interesting thing about Bitcoin is because the futures do open up on Sunday evening, we can't often get deterministic data on a Sunday, right? But Saturday is often Saturday trading, so Saturday trading, there can often be trade setups or opportunities. But higher time frame wise, macro perspective, Saturday is almost always like complete garbage data, right? So for your daily, so we've talked about this before. But anyways, let's stay on point because I want to kind of tie up Bitcoin here and then move on to the broader market and control. So we do have, and this will confirm on the daily. The hash ribbons indicator will confirm on the daily. It's the one by Capriel Charles. He's got a Medium post. If you guys would like to read more about this, I've linked this in previous videos. I've talked about this. And this, on top of BitMEX funding, on top of the monthly sell signal, on top of the weekly, on top of the pending daily or DMA baseline cross under the 13 and the 55 moving average on the weekly. And the daily 55 and the daily 55, as well as Wadatar explosion. About seven huge chinks in the bullish narrative here for me. And so on the close of this candle, so let's be more fair here because we need to be a little bit more nuanced about the hash ribbons indicator. It will be one thing that is going to be that would be pulled from my bearish argument, but it won't necessarily be slid over until the bullish argument just yet, right? The bullish argument's still very weak for me. As far as I can tell, the only bullish arguments that I think have some self-fulfilling, some technical standing, but more in the realm of not really technical indications that I look for or have respect for or fit into my analysis or trading, but more because they tend to be self-fulfilling prophecies. And that's going to be probably the most popular indicator out there that new traders are going to use, but it's the one that's thrown in your face. Is the relative strength index, as well as the MACD potentially. These are two, obviously, some of the most common technical indicators that we can see. And the relative strength index did, of course, reach oversold levels over here on the daily and did form bullish divergence, right? And then what do we get as a result of that? We got a big pump candle up to relative resistance, and we've gotten a little bit of follow through, but again, feels like a bull trap for the most part so far. And then as well, we can see that bullish divergence on the MACD as well and rising MACD momentum, right? So again, two popular meme indicators that are very, very popular with newer traders, and unfortunately, they're just they are indicators that even those who are considered experts in this field or good chartists or good analysts or good traders, because there's a difference, right? You have good analysts and you have good traders. They even talk about it quite a bit. So, let us then turn to BitMEX funding, and BitMEX funding on the daily is still popular or still bullish. So BitMEX funding is positive. And to confirm this, of course, let's not just rely on an indicator. We'll go over to BitMEX and we will look at, actually, you know what? I can never figure out, so we have to Google BitMEX funding. And then, DuckDuckGo in this case, and we just go to funding history at BitMEX. So just to confirm, you guys can see it right here from BitMEX. We can see that XBT USD contract daily or funding is positive, right? So here's the aggregated funding, right? So all right, so funding is still positive, meaning that many individuals are still trying to long this market. That is a good contrarian signal to the downside. That is a good contrarian bearish signal. If we take a look at often when funding is positive, we can see a clear correlation between funding and price not moving up, right? Okay, and it's only generally when funding turns negative and individuals are attempting to short the market that we get pumps. Right, so funding is positive Funding finally turns negative here, movement up. Let's see here. Funding is positive right here. Funding finally turns negative here and movement up. And funding is pretty much positive all throughout here. And then again, funding turns negative on the day right before the movement. Funding turns negative the day before the movement. I mean, come on, guys. Retail almost always gets it wrong. Now, being more specific with the hash ribbons indicator, the strategy that is recommended from the creator of this indicator is to apply a simple, two DMAs, simple daily moving averages to your chart, the 10 and the 20. And there's been one really bad signal from one abject loser from the hash ribbons indicator historically. This would be the 9th such signal that we've received since Bitcoin's history. If you look at the drawdown associated with just trading off of this strategy, applying the 10 and 20 simple moving average, that comes from, I want to credit the right person who added this addendum. Mr. A, I believe, over on Twitter, had the Agent Smith icon for a while. Pretty decent individual to follow. His analysis is okay. I don't trade the way that he does, but again, all traders are going to bring something different to the table. His analysis showed that, and I have confirmed this, that applying the 10 and 20 simple moving average to your chart and just waiting for the 10-20 cross up after the recovery signal does eliminate almost all drawdown associated with the strategy, right? So we haven't received that yet. So if you're just looking at this and wanting to remove this from the bearish argument and move it over to the bullish argument, that's fine. But I do recommend that you wait for that simple moving average crossover and wait for price to be bullish. Now, if you want to be aggressive, that's fine. Just understand that being aggressive carries inherent risk when you're kind of looking to enter early, right? For me, until the bullish argument outweighs the bearish, then I'm still going to be hedged, right? So for me, I make a lot of money in bull markets because I'm spot long. And then when the higher time frames do signal that that's flagging out or becoming bearish, then I move to a hedge, right? So that way, for my trading account, you don't lose money when Bitcoin starts moving down. Like at some point, you have to be quite happy, right? And when you get 60 to 80+% gains on a bullish maneuver off your entire capital balance, you kind of have to be happy with that and then lock that in, right, with a hedge. And then if your trading signal, the higher time frames then continue on and give you a good signal that we're going to get another continuation of this wave, then you can unhedge and go long. So you don't lose any money. You just lose sats by hedging your positions, by hedging your equity with a short sell. And if you do it the right way, like we teach individuals to, you have controlled for your downside, right? And that was probably another thing on top of sleeping well at night because of trading the daily and trading objectively. That is probably the other thing that students will say is that learning how to hedge and protecting themselves and knowing just when should you hold Bitcoin and when should you not, right? So that's fairly simple. It's a fairly simple concept, and we make that simple. And then you can begin adding complexity into that, whether it's discretionary trades or other markets or altcoins or leverage or anything like that, right? But you gotta start with, should I have risk on or long exposure to Bitcoin, or should I have risk off or short exposure to Bitcoin, right? Simple. And you can accomplish this by buying and selling BTC USD spot. That's okay. But in my experience, most individuals just do not have the fortitude to do that very well because it's a psychological thing. Like you are selling your Bitcoin and you're now holding cash, right? And you now have to actively buy back into the market rather than having a short position open and just closing that at some point in time, right?